Stocks have been struggling to shake off the downbeat move that's increasingly hanging over markets. There's a new survey out from KPMG that found that CEOs remain confident with the overall growth of the economy in the long term, but they're not necessarily optimistic when it comes to their own company's growth. Let's talk about that and more. We want to bring in Paul Knopf. He's the KPMG U.S. Chair and CEO. Paul, it's great to have you here on Yahoo Finance again. So let's talk about what you're hearing from CEOs. You talked to hundreds of chief executives just about their outlook right now. What did you learn?
Well, I think, first of all, we're getting more clarity on the duration of what we're facing into. So more clarity around the fact that rates are likely to be higher longer. And also, undoubtedly, inflation is going to be sticky. So inflationary pressures on food costs, on energy costs, certainly on labor costs are going to persist, it feels. So I think that's what's maybe causing some of the subdued confidence of CEOs for growth prospects going forward. And we also see, though, that CEOs are still wanting to put as their top priority generative AI. So 72% of CEOs said that that was their top investment priority, continue to invest in their ESG strategies. And interestingly, although market conditions need to stabilize, 54% of CEOs said they're interested in transformational growth for the future, largely through inorganic M&A.
Does subdued confidence for growth, does that translate into additional restructuring? Are we looking at another wave of headcount reductions, which we had thought we'd gotten behind us to this point?
No, not necessarily, because I think that if you look at the overall data, 77% of CEOs are still confident about the growth prospects of their companies over the next 3 years. So there's a lot of resilience and there's a lot of confidence in the business models CEOs have. I think we're all just trying to determine, how do we navigate higher for longer interest rates? How do we deal with uncertainties around inflation outlook? And that is causing us to dust off playbooks we haven't used for 20 or 30 years to try to ensure we know how to operate in that kind of environment.
Are majority of CEOs, are they bracing for a recession? I guess, how has maybe the last couple of months and the fact that we have seen this surge in energy prices recently, how that's playing into the recession probability?
Yes, I think for the last 12 to 18 months, we've all been trying to prognosticate whether a recession is coming or not. And if you'd asked me 6 months ago, I would have predicted probably not. I think there's a little less clarity on that right now. I think if there is one, the duration should be fairly short and not overly severe. But I do believe that there's still a lot of fog on the horizon, and it's really hard to know whether a recession will hit. Now, what I would say, though, is that we probably have had many kind of sector-based recessions that affect various types of industries over the last 2 years. But the probability of an overall recession for the U.S. economy is still hard to predict.
You mentioned the spending into AI. What do CEOs right now look at as the barometer for whether or not their AI investments are actually paying off?
Well, I think that we have to all realize that the investments are still at a fairly nascent stage at the moment. Sure. So there are really two kinds of investments. Investments that can help you transform your business model, and investments that help make you more efficient, transform, if you will, your operating models. So at this stage, it's largely around ideation, but a recognition that we need safe and ethical uses of generative AI. But at the same time, what business leaders are telling me is that every model that's been produced of generative AI, that the next one is multiple times better. So we're recognizing that technology is amazing, and 72% of CEOs saying that it's a top priority for them from an investment perspective means that this is not hype. It's going to be reality, that we are going to see increasing use cases of generative AI in many different industries. We think it'll be disruptive, and I think you see that reflected in the survey too, where many CEOs said it's a trend of disruption that they're going to have to pay close attention to.
When we talk about investments in AI, and we started to see this in the most recent quarters and earnings reports, it certainly has almost transitioned into a show me story. Investors, shareholders want to know how quickly it's going to impact the financials of the company. What did you learn, or have you learned there, just in terms of how quickly some of these companies that are investing or plan to invest in AI, when we'll see that return on investment?
I think most business leaders, CEOs, believe it's more of a 3 to 5 year horizon. And certainly there are going to be some near-term impacts, but 1 to 2 years out, there'll probably be somewhat meaningful impacts. But I think the real investments they're making will pay off in 3 to 5 years. And that's what the survey reflected. And we certainly see a tremendous amount of investment in this space. We are investing with Microsoft, Google, Salesforce and others in this space, and we see our competition doing the same. And we also see co-development of solutions. So I think that will accelerate bringing those solutions to market as we put together some of our capabilities with the technology capabilities of these companies.
Well, I think at 3 different points during this show, we've talked about some of the disarray in Washington, D.C., and particularly what that spells out for a general election year in 2024. How are CEOs positioning themselves, their companies, and planning for what the reality of that may look like for their businesses, too?
Well, Brad, geopolitical risk and political uncertainty rose to the top of risks that CEOs are concerned about. There's compounding volatility right now, compounding risk in the market. We certainly as a business community are watching what's happening in Washington very closely. We're concerned about the trajectory of potential legislation in the future and how some of these situations, such as the speaker's situation in the House, the upcoming election, are going to affect not only legislation going forward, but shutdown risk around the government, because those risks are very, very significant to the economy. And so we as a business community are watching very closely what's going to happen and hoping that there is more alignment around progress and around the business agenda in Washington, D.C.
One of the points that you highlighted a few moments ago from the survey was deal-making activity. What you're seeing there, what companies or what CEOs are planning to do within that space. What are some of the top ideas that you're learning from in terms of where you're expecting to see some of that activity take place?
Well, what we know for a fact is that corporate balance sheets are really healthy. And we know for a fact that there is a lot of money in private equity firms and otherwise on the sideline, ready to be invested, and many of them are still raising funds. So we know that once price discovery takes hold, once buyers and sellers come to a meeting of the minds around prices, and we start to get more stability in the leveraged finance markets, as well as ensuring we understand what the picture looks like for interest rates, whether they're going to increase any more, I think you'll start to see deal activity pick up sometime in 2024. A couple of the IPOs recently haven't been real successful, which initially we thought those were green shoots, and now we're having to kind of look at what's really happening in the market. But I think as we go into the end of this year and sometime into 2024, you'll start to see increasing deal activity, but probably not like what we saw in 2021 when the acceleration was really significant.
Paul, always a great conversation to get a pulse check of some of the CEOs, business leaders out there. Paul Knopp, who is the KPMG U.S. Chair and CEO, joining us here on set. Thanks so much.
Thanks for having me today.